In this video, I want to speak about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, so essentially hedge funds and the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a very strong monthly supply and resistance area. From here, all this previous rejection to the downside was created. Again, here, the market tested its zone and rejected it to the downside. At the moment, we can see how the market is testing exactly the same zone from which we could expect potentially to see bearish price action being developed away from this area. Dropping down on the weekly, what do we see? From a weekly perspective, we can see how the market has now tested exactly the previous high. From here, a previous rejection to the downside was created. Then we had another test of this zone. The market started rejecting it to the downside. And in a situation like this, we could expect more bearish price action to be printed away from this zone. Now, before we go down on the daily time frame, this correlates perfectly with what we were seeing from a directional perspective. If we zoom out in the long term, everything has been rising right inside of that monthly resistance that we have just identified. And now it seems like institutions are interested in bringing this market lower. Now, we don't see shorts added yet, but that is because the daily structure is still intact. In fact, until the market here from a daily perspective will remain above this previous daily resistance, which is now turned support, which was acting as resistance here, and again here, which after the market broke it to the upside, started acting as support here and again here. Until the market will remain above this level, it can easily continue higher. However, if the market manages to break below the support, at that point, all this previous support would become resistance here. So after the break on the retest of this previous support and resistance, this is where we would have very good probabilities to see a potential rejection to the downside away from this zone, inside of which we could see after the break on the retest, institutions start to add shorts as well. Now, I did speak about gold a couple of times in the past. I spoke about gold when the market was here. I explained all the reasons for which we could expect this potential rejection to the upside. And from here, I wanted to see first the correction and the continuation, which again is what the market gave us. Then from here, I made another breakdown explaining why we wanted to see first the correction, then the creation of a higher high, before then getting rejected to the downside, which is what the market has now provided. And by the way, I will link in the description all these previous analysis so you can go and check them out for more free education. However, at the moment, now that the market has broken below the support, now if the market will break below the support like it seems like it will do, because at the moment it seems like the market is pushing below the zone, if the market will manage successfully to close from a daily closing perspective below the area, all this previous support would become resistance here. So if we do get the break on the retest, how we could be approaching this potential rejection to the downside? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the downside. Now, if you enjoyed this free analysis education and update, make sure to drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.